Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Wednesday, the Australian dollar headed lower in the European session and now pauses in front of the level of 69.15, seen as a key point, as a break here would give further exposure to the downside and look towards 68.60. With technicals rather heavy, keep an eye on this level as a break, as I mentioned, will give further downside repercussions. Earlier on today, the Australian job report missed the forecast after the Australian Bureau of Statistics revealed the number of people employed dropped from 88,000 to 40,000, while the unemployment rate ticked lower to a 48-year low of 3.5 to 3.4. From that, the Australian dollar was a little bit weaker. So let's keep an eye on the top side, because that's the key level, which is at 69.70. A break there would reinstate the upside and look towards 70 to 71 cents. But in light of the technicals, I feel the market will may or most probably pressure this downside level of 69.15. Well, after 3 consecutive days, the euro has marched higher and now preparing its challenge at 101.1995. I feel a break there should give further leverage towards the upside and look to this trend line, which is around 102.65.75, and reassess. Like most key levels, the euro this time is looking at 101.1535, and while intact, keeps a bullish view in play. The dollar yen, well, the market's looking back towards its top side region of 134.95. A break there would give further scope towards 135.60.70, and then from there may actually see profit taking, given that the candles close to this region were quite negative, and therefore I feel that we may see a similar pattern emerge. Sterling, well, the market was a little bit whipsawed after the UK inflation number came out greater than expected of 10.1% in July, which was a fresh 40-year high. Still, the market was whipsawed, but hasn't completely broken down. So therefore, I feel that the support level, anywhere from 120.25 to 119.5, should offer a firm base for the sterling and eventually see a rise up to the 121 to 122 region. Well, all eyes on the key level 1,755 as the market headed lower on Wednesday. A break here would give further scope down towards 1,722 to 24. But before putting that call into play, keep an eye on these technicals, and also the recently from this challenged area from 55 did actually display a bounce. So we could see a little bit of profit taking coming back into the market as we get closer to this region. The level of $86 a barrel has held quite well for oil, and I feel the market should continue on with the given divergence. Could actually see a market pop up towards $90 a barrel, which I'm in favour of. As long as we don't break this level, then the bulls should continue to navigate higher. However, a break of 86 would give some concern, as the next target would be around $82 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, keep an eye on the intraday report. I hope you enjoy the rest of the day.